Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we're going to have one final revision of all the practical problems sum under the subject direct taxation. Again, a very important video for all the TYBMS Sem V student. So in this video, we're going to take up all the major important problem sums from direct tax subject and try to solve them in the most simplest and easiest manner. So let us start one by one. The very first type of sum that we're going to start is scope of total income. So let us see what are the various rules and how to solve the sum based on scope of total income.
Okay, following are the few rules that you need to keep in mind before solving scope of total income. Under scope of total income, we have to segregate the amount and we have to say it is taxable for whom? A resident and ordinary resident, resident but not an ordinary, or non-resident. So the rule states that number one, if any income is earned, received, or arise from India, that's the main thing. If it is your income is arising from India, everyone will pay tax for it. Okay, so you can see the tick marks. Everyone has to pay tax. If income is earned outside India, but it has been controlled, managed, and set up, those are the three important terms that has to be kept in mind. Control, manage, and set up in India. The first two guys has to pay the tax. And if it's a foreign income, then everyone needs. The first person needs to pay the tax. That's only the resident and an ordinary resident. So three rules. If it's arising in India, everyone pays. Control from India, first two people. Foreign income, first person. And now there's a new rule that dividend from Indian company, if it is given and if it is received in India, it will be chargeable to all heads. Prior to this, it was exempted, but now it is completely chargeable. Two exemption which has to be kept in mind: agricultural income from India, no one pays tax, and past profit or past untaxed profit which is brought forward, again no one pays tax. So income in India, everyone pays. Control from India, first two people pays. Foreign income, the first person pays. Okay, agriculture from India, no one pays, and past untaxed profit, again no one pays. That's it. These are the only rules that needs to be kept in mind. Now let us see how to solve the sum based on the following rules. Okay, now see, the question which is given is like, Mr. John, a British citizen, had the following income during the year 31st March to 2022, and compute his total income if he is an ordinary resident, not an ordinary, and non-resident, and then they have given you the list of all the income. Now this is the question, or similar kind of question will be there in your paper. Now see how we need to solve this. Okay, you'll note down particulars where you have to note down all the income particulars noted down as it is. Then you have to make three columns: resident and ordinary resident, resident but not an ordinary, and non-resident. That's it. This is the format of the sum. Okay, you need to note down all the particulars. Okay, and three columns. And now we just have to go through our rules. If it's an Indian income, everyone pays. Control from India, first two people. Foreign income first. Agricultural income in India, no one pays tax. Past untaxed profit, no one pays tax. Okay, so based on that rule, let us see. First, income from house property in India. Now, since it's in India, everyone will pay tax. Amount is 15,000. So 15,000 will appear in all the three columns. That simple it is. Next, income from property in Rome. Rome is a foreign country. Since it is foreign, only the first person will have to pay tax. Past profit brought to India, again past profit, no one pays tax for it. Income from Bangladesh or business in Bangladesh from being controlled from India, again is controlled from India. The first two people will need to pay tax. Interest on bank account in USA, again USA foreign income, so only the first person pays tax for it. Salary earned and received in Tokyo, again foreign income, only the first person pays the tax for it. Okay, the next is income earned and received in London. Again, it's a foreign income. Only the first person will have to pay tax. Last, dividend from British company. Dividend is from a British company, but it is received in India. Since it is in India, everyone pays tax for it. That's it. Okay, and after that, okay, after solving all this, you just need to total it up. So total will be somewhere around 93,047 and 32. With that, this sum gets done. You can easily get 7 to 8 marks. Okay, the question will be there with 7 to 8 marks. Very simple. Now with that particular rule, you can apply it into any sum. Okay, you can pick out any sum from your textbook, and the rule which I have given you all can see that and apply it to any sum, and you will be able to solve any kind of sum from that particular textbook.
Okay, now let us see the next type of sum, very simple long-term capital gain. So let us see what are the rules which are related to it and how to solve them in the most simplest manner.
Okay, now this is the format for solving the sum based on long-term capital gains. The sum will start with number one, sales consideration. That is the value at which you're going to sell your property in the previous year. Less brokerage or transfer fees any. So you minus from your sales the brokerage, you will get an answer as a net sale consideration. Now from net sale consideration, number one, you have to subtract something called as indexed cost of acquisition. It means we need to find the cost price of the property if it would be purchased in the previous year. The formula is cost of acquisition into CII, that is cost inflation index of previous year, upon CII of the year of acquisition. So this is one formula, very simple formula. Practically when you'll do it will be having a bit more weightage. You'll understand very easily what is that formula all about. After subtracting index cost of acquisition, the next thing is less index cost of improvement. Again, the formula is similar. Cost of improvement into CI of previous year upon CI of year of improvement. Improvement means if you're doing any renovation on your property. So for with that, you can ask for some exemption, or you can say some deduction on the value of your sale. When you subtract your index cost of acquisition and improvement from your net sale consideration, we'll get a first answer called a long-term capital gain. And if after that, if there is any new purchase or new investment made, we will subtract that also, and the final answer what we will get will termed as long-term capital gains. Very simple sum, just 4 to 5 steps, and the entire sum gets done. Now, before solving the sum, okay, there are a few rules that we need to note down. Number one, 2001 will be called as the base year. If any house is purchased before 2001, do not consider that value. Consider the fair market value as on 1st April 2001. The improvement before the year 2001 should be ignored. And most of the it's that the cost of acquisition will only be once in the question, but improvement can be multiple times. Okay, can be more than one time where you can have your improvement in the sum. Okay, those are the basic rule that has to be remembered. Yeah, the only thing what you need to know is the format is sale less cost of acquisition less cost of improvement gives you long-term capital gain. Less new purchase will again give you your final answer as net long-term capital gain. So now let us see how to use this format into any sum, any kind of sum that will be given in the exam.
Okay, now let us see how we solve the sum. We go through the question first. Mr. Raj acquired the house property on 1st March 92 for rupees 2 lakhs. The fair market value as on 1st April 2001 was 2,40,000. The cost of improvement made are as follows. They are giving you 4 improvement: 94-95, 2006-7, 15-16 and 16-17. He sold the house for 1 crore 80 lakhs on 25th Jan 2022, that is our previous year. He acquired new house in the previous year for 58 lakhs. He invested rupees 15 lakhs in bonds in the previous year, and there were some transfer expenses of rupees 75,000. The question is given that you need to compute the long-term capital gain for the assessment year 22-23. The CII are given for various years. That's nothing but the cost inflation index. Now let us see how to solve this particular question. Okay, first the name. We'll note the name as Mr. Raj. His status is he's an individual. The previous year will always be 2021-22 and assessment year will always be 22-23. Computation of long-term capital gain, particular amount. The sum will always start with sales consideration. How much are you selling your property for? So it's given here, he sold the house for 1 crore 80 lakhs. So that's 1 crore 80 lakhs less brokerage or transfer charges. So here our brokerage is given here. The transfer expenses was 75,000. So we are going to less 75,000, and that amount what we'll get will be known as net sales consideration So that will come to 1,79,25,000. Okay, after this our first step is less indexed cost of acquisition. Acquisition means purchase. Okay, so now let us see how to calculate that. The formula is very simple. Cost of acquisition is how much you have purchased for. Is given here. You had Mr. Raj had acquired the property for rupees 2 lakhs in 92. Now the rule was, if a property is there before 2001, we cannot take that value. We'll have to always take the fair market value as on 1st April 2001, which was rupees 2,40,000. So our cost of acquisition is 2,40,000 into, we have CII of the previous year. Now previous year was 21-22, so the CII will come to the CII table. We can see it's 317. So 317 upon CII of the year of acquisition. Now this amount was taken from the year 2001. So 2001 ka rate was 100. So now you multiply and you divide, and that value will be known as our cost of acquisition, which comes to that value will be 7,60,800. That's the first part. Next, less indexed cost of improvement. Improvement is all the renovation that have been taking place on your property. The rule is before 2001 we cannot take that, we have to ignore that. So I can see your improvements are given. So this is before 2001, ignore it. We'll take the first, that is for the year 2006 and 7. Improvement is 1,20,000. The rule is into CI of the previous year, which is 317, upon the improvement of the year in which it was taken. This is 2006-7. 6-7 ka rate was 122. So you divide and you multiply and divide, and you will get your value as 3,11,803. Same way, second improvement, it was 4 lakhs into CI of the previous year, which is fixed 317, upon the year of CI was 15-16. So 15-16 was 254. So the value will come approximately 4,99,213. And third, we have 3,80,000 into 317 upon, this is of 16-17, the rate is 264. So the value will be approximately 4,56,288. You subtract them all and you will get our first answer, that will be known as long-term capital gain from the net sales. It will be net sale less. Remember, from top to bottom each and every values will be less. So the value that you all should have got would be So it would be 1,58,96,896. This is known as long-term capital gain. From this we will less new purchases. I can see here is given he purchased a new house. So new house, which is 58 lakhs, and new investment, if any. So here is saying new investment in bond. I can see here you have invested 15 lakhs in bonds, so we'll minus even that. So from top to bottom, the only thing what you'll have to do is subtract. So from your long-term capital gain, when you subtract the other two values, you will get a final net long-term capital gain, which comes to approximately will come to 85,96,896. So that is how we need to solve the sum, which is based on long-term capital gain. So here we had cost of acquisition, cost of improvement, there were multiple, and also we had something which was purchased and some amount which was invested. This is how you need to solve the sum based on long-term capital gain. This was the first example. We'll be doing another example also. Okay, now let us see the next sum. Raj purchased a house on 25th 698. Now this is before 2001 for 1,50,000. He incurred expenses of rupees 1,50,000 toward cost of improvement on 28 2003. The fair market value as on 1st April 2001 was 8 lakhs. He sold the house in the previous year for 95 lakhs. He purchased a new house for rupees 2,50,000 on 20th March 2022. We'll make this as 25 lakhs. We'll keep this as this. This is 25 lakhs. And the CIF for 2001-2 is 100, 2003-4 is 109, and for 21-22 is 317. Compute the long-term capital gain. So again, name we'll write it as Mr. Raj. Status is individual. The previous year will be 21-22 and assessment year will be 22-23. Some will always start with sales consideration. That is, what is the amount at which you are selling your house. So here it is given that the house was sold for 95 lakhs less brokerage or transfer charges. Now in this sum we went through the sum but we didn't see any transfer charges, so it's nil. So our net sale consideration will be 95 lakhs. Now comes first less indexed cost of acquisition. Now index cost of acquisition may you will have to first take the value of your property. Now you have purchased it for 1,50,000, but that was in the year 2000, sorry, it was in the year 98, which is not possible to be taken. So we'll have to take the fair market value as on 1st April 2001, which is 8 lakhs into 317, that is by default, because previous year CI is always 317 for the year 21-22. Now this rate was taken, the amount was taken in the year 2001, so the rate is 100. So we multiply, we divide, and we'll get the index cost of acquisition as 25,36,000 less indexed cost of improvement. Again, this is for your renovation, so we can see that there's one improvement made in the year 2003 for 1,50,000, so that will be 1,50,000 into 317 upon 2003 ka rate is 109. Again you multiply, you divide, your value will be 4,36,239. Now there's only one improvement in this sum, so now we'll subtract from our net sale, and the value that we should get is our long-term capital gain. So 95 lakh minus both these values will come up to 65,27,761. From there, less any new purchase or investment. So we have purchased a new house, so less new house, which was 25 lakh. So when you subtract, you will get a final answer as long-term capital gain or net long-term capital gain, which will be approximately 40 lakh 27,761. So this is how we need to solve the sum based on long-term capital gain. Okay, now let us first go through all the deduction under chapter 6A, because now after that whichever chapters we are going to solve, this will be very important. Okay, so let us see what are the various deduction under chapter 6A. Okay, now there are 8 important deduction that need to be learned under the chapter 6A. Number 1 is under section 80C. Remember the alphabet. Okay, C stands for contribution. Contribution is like you are making a payment towards some investment, or you are buying something, you are contributing. Under that usually includes your provident fund, NSE,
FD for 5 years, mutual fund, etc. Remember the maximum limit of ATC is you can ask for a deduction up to 1,50,000. The second is section 80 triple C. Triple C may only one thing will be there, that is pension plan of LIC. Okay. Now remember section 80C plus 80 triple C together should be 1,50,000. You cannot ask for amount more than 1,50,000. The total deduction that can be asked under 80C and triple C together or individually is also 1,50,000. Next comes as section 80D. Remember D for Dawai. Dawai means something related to mediclaim. Okay. So D is for Dawai. For self, spouse, child, parent, 25,000 rupees ka deduction you can get. And if there is a senior citizen, you can get extra 25,000 rupees. Just remember, mediclaim has to be paid by check only, then you can ask for this particular deduction. Next is 80 double D. Double D ke liye remember the word dardnak dependent. Okay, there is a diseased person, a very dangerous disease, and he is a dependent person. So if there is a dependent handicap in the family, then if the severity is less than 80%, you can get 75,000 ka deduction, and if it is more than 80%, you will get 1,25,000 ka deduction. The severity level will be mentioned in the question. 80EE is for education. 100% of interest value will be deducted from the loan that you have taken for higher education. 80 TTA and TTB, both of them are basically for saving bank. Remember, A is for normal people. Okay, you get a limit of 10,000 rupees. TTB is for senior citizen and you get a deduction up to 50,000. And last is 80U. U stands for you. Okay, if you yourself are handicapped, then again, if your severity level is less than 80%, you get 75,000 ka deduction. If it is more than 80%, you will get 1,25,000 ka deduction. So these are the various deductions that you have to keep in mind. 80CC is for contribution. D is for Dawai mediclaim. Double D is Darnak dependent. E is education, TTA, B is saving account interest. One is for normal, one is for senior citizen, and U is for you yourself. If you are a handicap, then you can get that particular deduction.
Okay, the next part now is income from salary. Now, in order to solve income from salary, first we'll note down you'll need to note down all these rules. So let us see first all the rules. Okay, so income from salary may first always the gross salary, advance salary, outstanding bonus salary will come. Then all the allowances, then if anyone is retiring, so there are certain rules for pension. Then for gratuity, there are certain rules for perquisite, for leave encashment. If they are retiring, there are specific rules that you need to cover up. And when you add up all that, you get gross taxable salary. From there you deduct. Okay, you have deduction under section 16. When you minus, you will get your net taxable salary. So all these rules first you need to first note down, and based on that you can solve the aage problem sum. So let us see what are the problem sum based on income from salary. Is a physically disabled person, 50% is disability. I'll just mark all the important points which are given in the question. It can be used later on. He is employed with Reliance Private Limited, so it's private company. He gives you the following information on 31st March: basic salary, bonus, entertainment, house rent, conveyance allowance, perquisites and professional tax deducted. So all these things is based on income from salary. Other information when they are giving you interest received, dividend, interest on saving, that is income from other source. Gift from friends, again all those things have been given. The one what I have underlined, that is basically like a kind of a deduction which can come later on. So they are asking us to find is taxable income, net taxable income. So the sum will be divided in three parts: income from salary, income from other sources, and deduction under chapter 6A. The total what we'll get will be known as net taxable income. So we'll first start off with income from salary. Okay, so income from salary means the very first thing what they're giving you the basic salary, 60,000 per month. So I'll write your we'll write your status, name, assessment year, previous year particulars. The heading will be computation of net taxable income. First is basic salary, 60,000 into 12, which comes to 7,20,000. Next is bonus, 25,000 a month. So bonus 25,000 into 12 comes to 3 lakh. Entertainment 8,000 a month. So 8,000 into 12 comes to 96,000. House and allowance 20,000 per month. So 20,000 into 12 was 2,40,000 minus 60,000, which comes to 1,80,000. Whatever is exempt, minus it. Conveyance allowance 4,000 per month. So 4 12s are 48. Minus 20, so that comes to 28,000. Perquisites are all taxable, 24,000 per annum fees. So we noted down, we added up, we got the value as gross taxable salary 13,48,000. So we just taken whatever things have been given to us. Okay, see, these are other information, the other information not part of salary. Okay, so we just note down all the things which they are given us. We got the gross value. Now less deduction under section 16. We have two deduction. One is standard deduction, which is fixed 50,000, and second is professional tax. So standard deduction 50,000, professional tax 2,500, deduction under section 16 under salary head. So negative 52,500 goes outside. We minus, we got 12,95,500 as a net income from salary. This is Roman number 1, income from salary. Now once you all have understood this, okay, now we can go ahead and we'll go with income from other source. Now let us check what all income from other source. Interest received on government security, yes. Dividend, yes. Interest on saving bank, yes. Gift from friends, amount 50,000. The rule is gift from friends, non-relatives, more than 50,000 only, then it is taxable. If not, not taxable. So this amount is not taxable. It will not appear anywhere in the question. So we have 3 income from other sources. Income from interest on government security, dividend from HDFC Bank mutual fund, and interest on saving bank. 25, 15, 20. Total comes to 60,000. We add up 12,95,500 plus 60,000. We got a gross taxable income 13,55,500. So 2 parts are done. Last part is deduction under chapter 6A. Let us take what deduction we can ask. See, if the person himself is disabled, ATU, percentage less than 80, so 75,000 ka claim. Okay, 75,000 ka deduction can be claimed. Secondly, interest on saving bank comes under section TTA, maximum limit 10,000. 2 deductions can be seen in this sum. So deduction under chapter 6A, under section 80U, 50% disability 75,000. Section 80 TTA, saving bank interest 10,000. Total 85,000 in the outer column negative. So 13,55,500 minus 85,000. The net taxable income comes to 12,70,500. This is how you all had to solve the sum based on total computation of salary, other source and deduction. So the physically disabled person with 90% disability, I'll mark that. He is employed with Ganesh Printers, again private limited. He has given you his details. So again, see, basic salary, DNS allowance, commission, entertainment, traveling allowances, conveyance allowances, professional tax. These are all again income from salary details. Winning from lottery, interest received, interest. This is again income from other source. So it's similar to the previous question. So salary was an option with salary in this particular paper. So chalo, we'll start off. First was basic salary 30,000 per month. So basic salary 30,000 into 12 came to 3,60,000. DNS allowance was 20,000 a month, so 20,000 into 12 came to 2,40,000. Commission was 10% of basic and DA. Basic 3,60,000, DA 2,40,000. Total comes to 6 lakhs. 10% of that was 60,000. Entertainment allowance is 62,500 per annum. Directly we will take it. Traveling allowance is 60,000 per annum, but exempt is 12,000. They are giving you the exemption, so you minus and you put it down 48,000. Conveyance allowance is 48,000 and amount spent on official conveyance is 46. So 48 minus 46, 2,000 is the conveyance. We add up everything, and then professional tax that come later on. You add up, we got 7,72,500. Deduction में 2 deductions are there. Standard deduction 50,000 and professional tax 2,500. Outer column, when you take it and we subtract, we get 7,20,000 as income from salary. That's the first part of the sum. You all can go through it once. Okay, the second part will be income from other source. Winning from lottery, yes. Interest on saving account, yes. Interest on Kisan Vikas Patra, yes. So 3 incomes are there. Winning, interest on saving and accrued on Kisan Vikas. Add up 30, 25 and 5, 60,000 outer column. 7,20,000 plus 60 is 7,80,000 as gross taxable income. Under deduction, 2 deductions are there. I can see one is ATU. 90,000, which is more than 80%, so 1,25,000 ka deduction you will get. and interest on saving bank, which comes under TTA, but the limit is only 10,000. So under deduction under chapter 6A, section 80U, disability is 90%, so 1,25,000, and TTA saving bank interest 10,000, outer column 1,35,000. So 7,80,000 minus 1,35,000, the net taxable income comes to 6,45,000. This is how you all had to solve this particular question, which was based on, again, computation based on salary, other source and deduction. Okay, now let us check the next type of sum, which is income from business and profession, other source and deduction, or scope of total income, or you can say, like, that is calculation of total income using business and profession, other source and deduction.
Okay, first, before solving the sum, okay, we'll note down the format of solving income from business and profession when profit and loss account is given. Always remember, we'll start the sum with net profit as per P&L account. They will give us a P&L account. Towards that, we need to add expenses disallowed less income disallowed, and we will get a net income from business and profession. The only thing you have to remember here is that all those expenses which are not business related, we will be considering only those, and again, same way, income which are not business related, we are only going to consider those. Few points that you need to remember in the few rules. Number one, expenses which are paid in cash exceeding more than 10,000 rupees, 100% of that value will be disallowed. When two depreciations are given in P&L and in adjustment, then the P&L dip will be taken under the add, that is add expense may, and adjustment depreciation will be considered under the less column. No business expense and income will be considered. Only you have to take anything which is not business related. Disallowed expenses will include all your personal expenses, all your penalties, all partner related expenses, RDD, donation, purchase of assets and investments. And your disallowed income will include all your refund and interest. So first thing we'll always have to solve is find the income from business and profession. Secondly, we need to note down all the income from other source. We'll have to add our income from other source towards your business and profession, and thereafter we'll have to less all the deduction. So now let us see what are the things that can come in income from other sources. These are the various income from other sources that needs to be learned. So we have dividend, winning from lottery, interest on security, income from machinery, building, furniture, family pension and gift, which are more than 50,000 for non-relatives. You all can take a screenshot of this. When offer deduction, this is a list which has to be memorized, that is under section 80C, 80CCC, 80D, 80DD, 80E, 80TTA and 80TTB, and lastly 80U. Now there's a special video which has been made to understand what are the various deduction. If you all haven't went through that video, see that you all even go through.
Okay, now let us see how to solve the sum based on calculation of total income, where we have business and profession, other source and deduction. So we'll start off with name is Mr. J, status is individual, assessment year previous year, and computation of total income. Now always remember, we always start with number one, income from business and profession. That's our first heading. So first we'll have to solve the sum based on income from business and profession. Under that, now the question it is given, we have been given P&L account. So the format is, we always start with, now this is again 110% sum which will always be there in the paper. Okay, so this is one of the most important topic that you'll need to learn. You start the sum with always with net profit. So we'll write net profit, which is given in the question. The amount is 2,90,000. Okay, now towards this 2,90,000, what we'll do here is we'll make another column. Okay, because we are going to add up the net profit with our total income from business and profession. So we'll make another column for that. Okay, towards this net profit, the first thing that we need to write is, we need to note down is something called as add expenses disallowed. Remember, when P&L account is given to us, we have to always add expense. Okay, the very first thing that we need to do is we need to add all the expenses which are disallowed, meaning expenses that are not business related. Always remember, whenever we do a sum which is based on P&L account and which is given for business and profession, always remember you add all the expenses which are not business related and you add all the income, or you less all the income which are not business related. So we are basically noting down all those things which are not business related. So first what we'll do is you see the adjustment. They have given you adjustment as depreciation, staff welfare, rent and advertisement. Okay, the 4 things are given. So chalo, let us start with first all the expenses, that is the debit side of your P&L account. Okay, so now first thing what is given in the question is salaries. Now salary is a business related expense, will not appear in the sum. Only those expenses which are not business related we have to consider. Second is rent. Now rent is supposed to be a business expense, but there is an adjustment. Rent is paid for his residential house. Now since it is paid for the residential, that's personal is disallowed. So number 1, rent that is personal amounting to 60,000 is disallowed. Next after rent is printing expense. Printing is a business expense, will not appear in the sum. Next is advertisement expense, usually won't appear, but there's an adjustment. Advertisement expense are incurred for an advertisement in the souvenir of political party. Now anything that is political is not business related, disallowed in the sum. So we'll write here advertisement, this is for some political event or political souvenir. Disallowed amount is 5,000. Next is motor car expense. Now they have not given us any adjustment, so we'll assume that a business expense will not come in the sum. Embezzlement by employee. Now that is a loss which has been made because of an employee, that is business expense, will not come in the sum. Staff welfare, again business activity. There's an adjustment towards that. It says that staff welfare includes 10,000 for medical treatment of an employee. Again, that's a normal course of business, will not appear in the sum. Next is purchase of NSE. Okay, purchase of any asset is disallowed, so we note down this, and investment is also disallowed. So purchase of NSE amount is 50,000, which is disallowed. Next is depreciation. Now the rule is if there are 2 depreciation, the above depreciation will come, the depreciation which is there in the question will come on the add side, so we'll add depreciation, which is 25,000, and the one which is there in the adjustment will come under the less side. Okay, so all our expenses are done, so we will total up the expenses. So see, the adjustments were depreciation, which is yet to, one part is still remaining, that will come in the less part. Staff welfare we have taken care of, rent taken care of, advertisement taken care of. Chalo, we add it up. So 60 plus 5, 65, 1,05,000, 1,10,000, 1,30,000. Plus 10, so that's 1,40,000. So we have 1,40,000, the total. After we have noted on add, the next thing will be less, under which we have to note down all the income which are disallowed. Now income which are disallowed, meaning all those income which are not business related income. So on the buy side we can see that GP, that is a business related, won't come. Interest on NSE, so yes, that is not business related. So interest on NSE amount is 6,000. Next is gift from father. Always remember, gift from father, mother, grandparents and your siblings are not taxable. Okay, under the income from other source, but since this is a business and profession income, it is not a business related income, so it will appear here. The second, gift from father, since it's not business related, we'll note it down, 51,000. So just think of the fact that all those things which are not business related we need to note it here, expenses and income. Okay, next is income from mutual fund, again not a business related stuff, so income from mutual funds amounting to 12,000. The fourth one is income from lottery. Again, it is nothing to do with the business, so winning from lottery is 1 lakh. Okay, and the second effect of depreciation, whenever there are two debt, one in adjustment, one in the question goes in add, the adjustment will go in the less part, or less depreciation, which is 28,000. Okay, so we add up all those income which are supposed to be disallowed, so it comes 6,000 plus 51,000 plus 1 lakh plus 28,000. So 6,000 plus 51 plus 12,000 plus 1 lakh plus 28,000, it comes to 1,97,000. So negative 1,97,000 because it's going to be less. Okay, so now finally we need to find the income from business. So our net income, it will be net profit, add all expenses, less all income disallowed. So it will be 2,90,000 plus 1,40,000 minus 1,97,000. So our income from from business and profession, income from business and profession is 2,33,000. So I'll write it here. This is income from business and profession. Okay, that's our first part gets completed. The next thing, now after this, the second, we need to note down all the income from other sources. So now we need income from other sources. So that's the second part of the sum, income from other source. Now remember, in order to find the income from other source, you only have to look at the credit side of your P&L account. Number one, interest on NSE. Yes, interest on NSE is income, okay, from your investment. So that will be interest on NSE. So yes, it's an income from other source. So I will put it in the middle column. Okay, so that comes to the amount is 6k. The next is gift from father. As I told you, gift from father, your grandparents, your mother, your sibling are not taxable, cannot come in your income from other source. Next is income from mutual fund. Remember, interest and income from mutual funds and PPF, that is public provident fund, is fully exempted, will not come. Next is winning from lottery. Yes, it's an income from other source. So I'll write it as winning from lottery. That is 1 lakh. So my total income from other source is 1,06,000. Okay, and now income from business and profession 233 plus income from other source 1,06,000. The total of that is nothing but my gross taxable income. Okay, that's the income that I've got from two sources. So 2,33,000 plus 1,06,000, that will come to 3,39,000. Now last step number 3, that will be deduction. Now we have to minus the the main deduction, that's called deduction under chapter 6a. Now let us see what all deductions are available from the question. Now I can see NSE. Now NSE means something where you have invested. That comes under contribution, so it means you have contributed, so it comes under ATC. Under ATC I have purchase of NSE with interest. There's an interest also on that. So I have 50,000 ka NSE, 6,000 ka interest, so 56,000 ka deduction. Okay, there is no other deduction which I can see here, because we went through the entire question. There was no provident fund, no disability, no nothing. Okay, so there was only one, that is purchase of NSE with interest, which comes to 56,000. The limit is 1,50,000 under ATC. I will subtract that from the gross taxable income, and the answer what I will get finally is my net taxable income. Okay, so my 3,39,000 minus 56,000. So our final answer is 2,83,000 rupees. Okay, that's 2,83,000. So this is how we need to solve the sum, where they ask us to find or to compute the total income from business and profession, other source and deduction. Remember, business and professions 110% will be asked with total income. Okay, meaning whenever they will give you a question, always read the question. Whether they're asking you to find only income from business and profession, then the sum gets over here itself. But if they will tell you find the total income, then it will be business, profession, other source and deduction. And always remember, income from business and profession will always be asked under the heading total income. So this is how you had to solve the sum based on total income, where you had business and profession, other source and deduction. I hope everyone have understood this. Okay, now we are going to take up a second sum which will have again kind of a similar business and profession, other source and deduction question. Okay, now let us see how to solve this particular sum. Okay, now it is given that Mr. X is a handicapped person with 86% disability, and then they give you the P&L account, and then they are giving you the adjustment. Adjustments are based on depreciation, advertisement, general expense and GST. Okay, so again we have to start first with the income from business and profession. So we will first put the heading number 1, income from business and profession. Okay, again your sum will always start with net profit. So in the question, the net profit is given as 5,19,400. Okay, after that we have add all the expenses disallowed. Okay, so we'll start one by one. First thing is salary. Now salary being a business expense will not come in the sum, so we ignore that. Next is conveyance. Conveyance is traveling charges. Again, business related won't come. General expense usually doesn't come, but now there's an adjustment. General expense includes 7,000 for medical expense incurred for Mr. X. Okay, so if it is for Mr. X, now this is something which is something which is very personal. The amount of general expense which was for personal is given here. Medical expense was 7,500. Since it is personal, okay, it will be disallowed. If it was for any employee, then it would have been a business expense, but since it's for himself, it is personal. So number 1, it will be for medical expenses. So personal medical expense. So personal medical expense amount to 7,500. The next is GST. Now GST is a normal business expense, but now they have given you adjustment. GST includes 15,000 paid towards penalty. Penalty is not a business expense. It's a mistake done by the owner. So it will be disallowed. It's not an expense that is a normal course of business expense. So GST penalty, all type of penalty will be disallowed. So the amount of GST penalty is 15,000. Next, we have advertisement. Advertisement is a normal business expense, but they are giving you adjustment. That advertisement expenses of 31,000 are paid in cash. Now the rule is up to 10,000, if you're making payment in cash, it's allowed, but above 10,000, if you're making any payment in cash, it is completely disallowed. So I'll write here advertisement in cash, fully disallowed, 31,000. The next is provision for doubtful debts, RDD. Remember, bad debts is an expense. The provision for RDD of reserve for doubtful debts is not an expense. It is disallowed. Contribution to PPF is an investment, so that is again disallowed. So contribution to PPF is completely disallowed, which amounts to 60,000. Next you have depreciation. Check. Now there are two depreciation. If there are two depreciation, one of the debt will come on top. So the question may whatever depreciation is given will appear in the add part, which is 45,000. There's an adjustment to it, but we'll see that later on. Okay, so we have all the expenses done. So we added up. So 7.5, 15, 31, 15, 60, 45. Total will come to 1,73,500. Once you got all the expenses disallowed, next will be less income disallowed. Now let us see what all incomes are available to us. Now GP is a business, so it doesn't matter. Next is interest accrued on NSE. So yes, interest on NSE is not business related. Interest on NSE, the amount is 12,500. Gift from friend, again not a business income. So disallowed, amount is 51,000. Duty drawback is income which is of the business related, so it will be allowed, will not appear in the sum. And thirdly we have depreciation. Okay, that will also be less. Now depreciation get said that depreciation charge is found to be in excess of 6,000. 6,000 is extra. We have already noted 45, which is 6,000 extra, so we'll remove that out. So the value becomes 39,000. Okay, that's it. No other incomes are given to us. So income and depreciation together 12,500 plus 51,000 plus 39,000, which comes to 1,02,500, but negative. So income from business was 5,19,400. Add income expenses which are disallowed less income which is disallowed. The value that should have been, the total that should have come was 5,90,400. So that's our income from business and profession. So with that, our first part gets done. Now we jump to, so that's my first answer. Okay, that is income from business and profession. Second, we jump to the second part now, that will be income from other source. Now income from other source, again we'll have to look at the income side. So income I can see there is one NSE. Okay, the first income was NSE ka, and second one was gift from friend. Now friend ka rule is, if it is income from other source ka rule was, if any non-relative is giving you gift more than 50,000, it will be fully taxable. So number one, I have NSE interest, which is 12,500, and I have second gift from friend, which is again fully taxable, 51,000. So the total comes to 63,500 as income from other source. When I add it up, I will get my gross taxable income. So which will come to income from business and profession plus income from other source, which will be total as 6,53,900. Last step, deductions. So deduction under chapter 6A. Let us see what all deductions are available here. Okay, first thing, they are giving you a contribution to PPF and interest on NSE. Now both of them come under ATC because they are contribution. So ATC may you have PPF plus NSE interest, the total of which is, you have 60,000 ka PPF, 12,500 ka NSE, so I get the value as 72,500, which is less than 1,50,000, so it is allowed. Secondly, now it is given that Mr. X, a severely handicapped person with 86% disability. Now he himself, so ATU, okay, he is severely disabled, okay, and the disability is 86%. So he is an handicap with 86% disability. So since it is more than 80%, you will get a complete lump sum deduction of 1,25,000. So that's it. There are two deduction. So from gross total income, when I minus subtract both my deduction, I will get the final answer, that will be net taxable income, that will be amounting to 4,56,400. That's our final answer. So this is how you had to solve again the sum based on calculation of total income when we have been given income from business and profession, income from other source, and deduction.
Now the last type of problems that we need to cover up is income from house, property, other source and deduction. So let us see how to solve that. Income from house property. Now there are four types of property that we can be given. One is called SOP, that is self-occupied. The other one is called LOP, that is let out property, meaning property which you are given out on rent for complete 12 months. VLOP, that is the property which has been vacant for particular number of months in a year. So that's less than 12 months pay you're giving on a rent. And DLOP is nothing but it is assumed LOP. It's like an LOP. Okay. Now format goes with A, B, C, D, E, F, G. The first alphabetical wise up to G, that is gross annual value. The formats say that first is fair rent and municipal value, then it is higher of A and B, standard rent lower of C and D, and actual rent, that is higher of E and F. Now the question states that after getting gross annual value, the next thing we have to do is we have to less municipal tax. From municipal tax, when you subtract, you will get your first answer, that's called NAV. From NAV comes less deduction under section 24. Two types of deduction. One is standard deduction, that will be 30% of NAV, and the other one is interest paid on construction of the house property. When you subtract the deduction from NAV, you get income from house property. Now the rule is that for SOP, that is self-occupied, all the values up to NAV and standard deduction will be nil. Only interest paid can be available. For LOP, it goes as per the rule. And for VLOP, the rules is very simple. Whatever is the actual rent, that will become your GAV, and thereafter you have to solve the sum according to the format. Okay, DLOP and LOP both are same, so they will go as per the entire format. Only for VLOP, you have to remember that whatever is the actual rent, that will become your GAV. Okay, so that's the basic format of income from house property. So if in the question is given only calculate income from house property, this is it. This is the only the format. But if they tell you compute total income and they have given you house property, so then after finding the answer of income from house property, the next you'll have to find income from other source. Other source includes your dividend, winning from lottery, interest on security, income from machineries or all other assets, family pension and gift which are more than 50,000 from non-relatives. After getting income from other source, we'll have to do less deduction under chapter 6A. All the sections are given. We have made a special video for that where we learned about what are the various deductions available and how can you get those deduction under what each deduction, what itineraries are added. Okay, once we have learned the format, the thing that come under other sources and the thing that come under deduction under chapter 6A, we can now start with the actual sum. So let us see how to solve the sum when they ask us to find total income when they are giving you sum based on house property. So let us see how to solve the sum.
Okay, now let us see how to solve this particular sum. In the question it was given that Miss Gayatri has two houses. The first one is SOP, the second one is LOP. Now the rule for SOP is that up to NAV, all the values of self-occupied property will be nil. Okay, so now we only have to do the calculation of LOP part. Now this is a sum which has computation of total income. So you will have income from house property, other source and deduction. If in the question they have only asked, so in the exam if they only have income from house property, this is it. This is the only format that has to be solved. Okay, chalo, now for LOP we'll see what things have been given. The very first thing they have given you is fair rent 6 lakhs. So we'll note down that 6 lakhs. After that, they're giving you municipal valuation 6 lakhs 10,000. We noted down. Okay, point number C is higher of A and B. So the higher value among these two was 6 lakhs 10. So we'll note down this as 6 lakh 10. Next was rent received 6,50,000. So I'm writing down at rent received 6,50,000. So whatever data has been given, we are just posting it down. Next is municipal tax paid is 40,000. So municipal tax paid is 40,000. The rule is municipal tax has to be paid by the owner, and that also needs to be paid. No outstanding will be allowed or will be noted down here. Okay, secondly, now this is a sum where the entire thing is based on LOP. So there is no vacant let out. This is purely let out. Okay, now the only difference between let out and VLOP is that we'll finish this part and then I'll tell you what's the only difference between both the properties. So if the question comes based on VLOP, how you will have to formulate that. Okay. After that, they're giving you fire insurance, nothing to do in the sum. There's no place for fire insurance. Land revenue doesn't have any place. Interest paid on loan taken for construction of house, yes. Now that is the only thing which will appear on both the sides. Okay, so that will be negative 1,60,000 and negative 1,50,000 since they come under deductions. Remember, under SOP, if the interest on loan is before 1999, only 30,000 ka deduction you can get. If it is after that, okay, you will get 2 lakh ka deduction. So there's 2 lakhs on either side, you will get a deduction of interest on loan for the property or for the house property. Okay, so now this is it. There's nothing else that have been given, and then they have told us there's something repayment of principal, and then there are some adjustments. The adjustments are nothing to do with this property, the house property sum. So now higher and lower we got, there's no standard rent. So we will get point number E, that is lower of C and D, as 6,10,000. Again 6,10,000 and 6,50,000. Higher of your E and F step is your gross annual value, which is 6,50,000. Now from 6,50,000 you minus municipal tax and you will get your NAV. So it's come to 6,10,000. From that, now we need deduction under section 24, standard deduction, that is 30% of NAV. So 6,10,000 ka 30% will come to 1,83,000 in negative. Okay, so that's it. From NAV we subtract all our deductions. So now for SOP it will be negative 1,60,000 itself. For LOP it will be 6,10,000 minus, so you get 2,77,000. Okay, and your final answer, your final value, that will be net income from house property. From house property is positive 2,77,000 minus 1,60,000, which comes to 117,000. That's your income from house property. Now to this we need to add income from other source. So that's our second part. We note down this as income from other sources. Now from income from this, let us read the adjustment. It is said that Ms. Gayatri also receives some other income. Number one, dividend fund Mafatlal Industry. So now before, dividend in the previous old years, dividend was exempted. Now dividend is no more exempted, so yes, it will be chargeable. So dividend is an income from other source, yes. The amount is 10,000. And secondly, they said interest on FD. So yes, interest on FD is also a income from other source, which is 20,000. Okay, and then it said you paid some insurance. So insurance doesn't come here, that will come under some deduction. So income from other source is 30,000. You add up and we will get our gross taxable income. So gross taxable income will be 1,17,000 plus 30,000, that will come to 1,47,000. Now towards this last step, that is step number 3, that is we need to minus deductions under chapter 6A. So let us see what all deductions can be seen. Now there is one thing, repayment of principal amount of loan. Okay, that comes under 80C, that is repayment of loan amount. So the value is, I can see that's 30,000 given, so that will be 30,000 negative. And last adjustment said that you paid some medical insurance. Now medical insurance come under 80D, medical insurance comes under 80D, so that comes to, now 25,000 ka deduction is available. So the value here is given 18,000 by check. If it is by check, you will get deduction up to 25,000, and since it's only 18,000, we will note it as 18,000. Okay, other than that, there's nothing else available, so that's it. From gross taxable income, when we'll subtract our deduction, we will get a final answer, net taxable income. Okay, that comes up to okay, so it will be 1,47,000 minus 48,000, so that will come up to 99,000. Okay, so with that, this particular sum comes to an end. Now, in your exam, if they have only asked you to compute income from house property, then it will only get over up to this step. If it is a total income sum, then it goes ahead with other sources and deductions. Okay. Secondly, if this sum would have been a VLOP, okay, instead of LOP, if you had VLOP, the rule is only one simple. Whatever in VLOP, whatever is your actual rent, that will become your GAV. Okay, whatever is your actual, that will become GAV, and thereafter you have to solve in the same manner. So no matter if your actual is less than, step number E, still you'll have to take the actual. Okay, that's the only difference VLOP and LOP. In LOP you go as per the rule high, low, high, but in VLOP, whatever is your actual rent, that becomes your GAV. Okay, so I hope everyone have understood. It's a very simple topic. Again, it's a very important from the exam point of view, and I hope everyone have understood it. Chalo, with that, we will be ending this video. Thank you.